Today, we're digging into a recent analyst report from DBS that's all about a company called Core REIT. And trust me, something pretty big just went down that could completely rewrite its story for investors. Okay, let's jump right in. So if you've been watching Core REIT stock, you know it's been a bit of a rough ride. For a while now, there's been this huge question mark just hanging over the company's future. But a recent announcement might just be the massive breakthrough everyone's been hoping for. So, to really get why this news is such a big deal, we first have to understand the problem. You see, there was this major, cloud hanging over the company's prospects. The analyst who wrote the report put it perfectly. This central problem was a key earnings overhang. Now, that's some financial jargon, right? But all it really means is there was a major unresolved issue that made it super difficult to predict how much money the company was going to make. And if there's one thing investors can't stand, it's uncertainty. Okay, just a quick refresher for anybody who needs it. Core REIT is a REIT, a real estate investment trust. So just think of it as a company whose entire business is owning properties, in this case, data centers, that generate rent. For a company like this, an empty building is a really, really big problem. And that brings us right to the heart of that overhang. A massive, really important data center facility called Linton Hall was just sitting there, empty. Yeah, it was being refurbished, but with no tenant and zero rent coming in, it was this giant question mark hanging over the company's bottom line. But then, that all changed. That giant question mark over Linton Hall, it suddenly got a very, very definitive answer. This, right here, is the turning point of the whole story. So, what exactly was this game-changing piece of news that just cleared the air completely? This. A massive 10-year deal to lease out 100% of the Linton Hall facility. And not just to anybody, but to a major, top-tier global cloud service provider. I mean, with one signature, this single deal completely solved the company's biggest headache. A 10-year deal sounds fantastic, right? But what does it actually mean in dollars and cents? Come on, let's unpack the financials, because the numbers here, they are really impressive. Now, this number right here shows some incredible pricing power. They didn't just fill the space. They signed the new lease at rent and rates that were roughly 35% higher than what the property was getting before. That screams incredibly strong demand. So, what does a 35% rent increase on a huge data center actually add up to? It means an estimated $14.8 million in new annual net property income for the company. And that starts kicking in from December 2026. That is a substantial and, more importantly, predictable new stream of revenue. And that brings us to a really crucial metric for anyone invested in a REIT, DPU, or distribution per unit. This is basically the dividend payout. It's the cash that investors get in their pocket for each share or unit that they own. For a lot of people, it's the whole point of REIT investing. So, the million-dollar question is, how does that $14.8 million in new income actually affect investors? Well, the DBS report projects this deal will boost that DPU by a very significant 16.5% in the 2027 fiscal year. That is a huge direct benefit to shareholders. But beyond the straight cash boost, this one single lease had this transformative effect on the health of the company's entire property portfolio. The ripple effects here are pretty significant. I mean, just look at the difference here. It's night and day. Occupancy shoots up from a kind of worrying 79% all the way to a super healthy 98%. At the same time, the weighted average lease expiry, or WALE, which is a key measure of how stable their income is, gets a full year longer. In short, the entire portfolio just got a whole lot safer. So, to wrap it all up, this deal gets rid of that major uncertainty we were talking about. Gone. It makes their future income way more predictable. And hey, as a bonus, the refurbishment actually increased the facility's power capacity by 13%, making it even more valuable. And finally, it's just proof that the market for their properties, especially in a place like Northern Virginia, is absolutely red hot. So, with all this overwhelmingly positive news, what was the final conclusion from the DBS analyst who put this whole report together? The verdict is pretty unambiguous. The report states, quote, "This development is a clear positive," and even notes that the timing of the deal was a little bit better than they had originally forecast. You really can't get a much clearer endorsement than that. And that positive view is reflected right here in the final recommendation. DBS is maintaining its buy rating on Core REIT, and they've set a price target of 68 cents. That tells you they see some significant upside from where the stock is today. And so that leaves us with the final question, doesn't it? The company just solved its single biggest problem with one transformative deal. It's dramatically improved its financials and its overall stability. Does this mean the future for Digital Core REIT is finally as bright as its newly powered up data center? Well, that's something for investors to really think about.